Hi, this is Paul Drankon for the September newsletter, news video, and this month I want to talk to you about life insurance. September is Life Insurance Awareness Month in this industry, and it is a critical piece of the financial planning process. So I want to talk to you just a little bit about that today. Do you have enough life insurance in place? That's one of the questions you have to ask yourself. And also, do you have the right type of life insurance in place? There's really two types of life insurance: term or temporary insurance and permanent. The temporary insurance is for a specific period of time, 5, 10, 15, 20, 30 years, usually larger amounts, usually a little bit less of premium, and it gives a lot of protection for specific situations or the right situations, typically when younger people have children and there's a very definite vulnerability there. The second type is permanent. You might have heard it also called as whole life, universal life, maybe variable life. These policies last the entire lifetime of the individual and is there whenever they might pass away, whether it's at 50 or 90. Life insurance can protect a lot of different things for people. It can protect what we just talked about, the final expenses for people. It can provide for income for people over time to help them get through the initial shock and loss of income of the other spouse or person. It can provide college education, ongoing education for children. It can also, in times, the insurance can provide protection for people who might want to lend you money to start a business. Point is, there's a lot of reasons you can use life insurance. It's very critical, and the critical question is, do you have the right type and the right amount for your stage in life, whether you're 25, 30, 50, 60, 80, 90 years old? That's the critical question. There's an acronym that's used in this business of the things that life insurance really needs to address. DIME is that acronym, just like the coin, D-I-M-E. D stands for the death benefit, or the final expenses you might have to pay for, death expenses. I is for income, to be able to provide the survivor's income for a period of time. M is to pay off loans or even the mortgage. The mortgage part of the acronym is the M. And E is for education, to provide that education for children or other people in the family. So life insurance, a very critical piece of the pie when you're actually looking at your financial planning. And also, one last note, if some of you a little bit older have life insurance policies that have been in place for quite some time and they're permanent, you might have built up quite a bit of cash value. And there might be a better way and tools where you can utilize that cash value for your stage in life now that you're at that point in time and don't maybe need quite the large amount of death protection. So at any rate, hope you have a great Labor Day weekend, holiday. Enjoy yourself, relax, and certainly give me a call anytime. I can sit down with you and do a complimentary life insurance review to make sure you're properly protected with the right type and the right amount of life insurance. Till next time, this is Paul Drankon.